Hey there, good morning, everybody. Running just a little bit behind. Sorry about that. We had some technical issues here, but it does appear that I've got the stream working now. If you guys encounter any problems, if you can't hear me or see me or something like that happens, let me know, all right? But I think I've got it fixed here. Anyway, welcome. It's just a bit after 11 a.m. Central Standard Time here on Friday, the 11th of September, 2020. It was this day almost, I guess it was almost 20 years ago now, right? We had 9/11. A somber day for a lot of people. But anyway, hopefully y'all are doing well. Let me see here. Who is here already? Nivlusian is here. Data. Said that you're mentioning the 9/11 as well there. Hey, Entertainer Lamb, what's going on, buddy? You missed everything. And yet you missed nothing, my friend. Good to have you here as always. Let's see. Universal is here. Excuse me. Hey there, Sean. Good to see you. LG, what's up? He says, Volatility, where art thou? As you know, the longer you go sideways, the more likely it's coming, right? It's always a good time to buy, except when it isn't, Mr. Lamb. Man, I got such great responses today, don't I? Guaranteed to just frustrate the heck out of everybody. Hey, listen, guys, join us at howtotradetowin.com. We'd absolutely love to have you with us. I've mentioned before that I'm looking at limiting the amount of members we have right here coming up. And I think the first step in that, I'm pretty sure I'm going to do this. I think we're going to close off any new memberships to the first and second tiers sometime next week. The only tier you'll be able to enter as of next week will be tier 3. So if you're interested in getting in tier 1 or tier 2, you might want to do that before you can't anymore. Again, the whole idea of what we're doing here is really kind of promoting that education, doing what we're doing, and trying to keep things where we can give the best service to our members. So lucky for our members, it's not like, hey, I'm just going to get 10,000 people and just keep doing it right now. No, we're going to grow as we can. But I don't want to really kind of, I don't want to have our members losing, what they have right now along the way, the kind of the contact and the constant update and the information and the education and everything. A lot of times companies grow too fast and they get way ahead of themselves, and then they can't service their members the way that they originally did. And we're really trying to avoid that. So I think that's what we're going to go ahead and do. So sometime next week, just be prepared. You won't be able to join at tier 1 or tier 2, only tier 3. And we'll, have it loading on there, and we'll see how that goes. And then we'll work from there. And of course, as we grow, we'll continue to add more and more staff, just to kind of keep you guys with more and more information and just content, guys. It's all about the content, man. I'm trying to give you so much content that you guys can't do anything else all day long. Hopefully you guys like the sounds of that. Let me see here. Who else is here? We've got Chris Babb. Happy Friday, my friend. Good to see you here. Ollie, what's going on, man? I am having a great week. Said I just had a good one. Just passed the AWS Solutions Architect Associate exam. Man, that is awesome. Congratulations, man. So you're working with that Amazon Web Services now, huh? Great to hear, man. I love it when y'all tell me about these things. That's great stuff, man. Some people tend to think that if you're trading, that's all you can do. Guys, I'm just a firm believer that trading should give you the opportunity to do other things that you want to do. I don't think that if you're trading, it should bog you down to just trading and that's it at the end of your day. I think you should be able to learn new skills and maybe create different job opportunities or whatever it is, guys, whatever makes you happy. I think that's what trading should do. It should give you time and money so that you can pursue those other things. But anyway, really excited to hear that. KMG, what's going on? Good to see you. Let me see here. El Bitcoin Outa. I probably screwed the last part of that up, but good to have you here. Cord 100K, what's up, buddy? Says it's my third month in Discord, and each day all of your education info makes more and more actionable sense. Learning so much. Man, absolutely fantastic. I love to hear that. I love to hear that. Because, guys, again, we take the feedback seriously. And we try to incorporate suggestions that you may have and whatnot as long as they're feasible. At the end of the day, we don't want to add something that ends up taking away a whole bunch of everything else. So we constantly do it. And maybe we can't add what you're suggesting today, but we always work toward potentially being able to add it. Anybody that's been with us for any amount of time, they can vouch for me on that. They know we're always trying to add more and just create a better service for everybody. Excuse me. But at the end of the day, guys, we give you, 15 to 20, depending if you're tier 2, tier 3, 17 to 20 daily and intraday analysis going on across all the markets. If you're tier 3, you get the hot takes on Sundays, Tuesdays, and Thursday evenings, which are our stock, crypto, and Forex setups. Gosh, what else do we do, man? We do the live tier 3 training every Wednesday. Oh, man, that has turned out to be so fantastic. The feedback I'm getting is just phenomenal. Everybody's just really loving it because we're teaching you guys, the things that are often really the most difficult things, especially if you're new to markets. And how do you get started? You come in and you want to get started, but you don't know what you're doing. So that educational thing we do every week gives you mechanical ways to enter, exit, put stop losses on your trades. So that way, even if you're today is the first day you ever opened a chart, you'd be able to put them to work today, and you could be profitable. So we've been doing that, gosh, for I guess about 2 months now. And so whenever you guys join, you still get access to all the previous ones. So that's, about 10 hours or 12 hours of content right there just over the last 2 months, additional educational stuff beyond the other educational stuff that we already have there. So, gosh, I guess that makes it, if you're tier 3, I guess you're getting upwards of probably close to 25, 30 hours of educational video content right now as it stands. So, yeah, and I know I'm always forgetting something, man. We do so much stuff. If you're tier 3, you also get the DeFi channel where Scott Melker talks about his trades and his setups and what he's looking at. Most of the time it's before he ever mentions it on Twitter or even in his newsletters and whatnot. You have the VIP Alts channel where Scott talks about his alt trades in there. As well as we've got a couple of really great traders that just kind of just live in that channel, guys. And if you're tier 3, you know what I'm talking about. Lots of opportunity, always watching the markets, great entries, great exits, lots of profits going on in there as well. I mean, it just is what it is, guys. I honestly don't know of anybody else that puts out anywhere near the amount or level of content that we put out, and especially nowhere near the price that we charge. So, if you think you can find more and better for less, my hat's off to you. But we work really hard to make sure you don't. So anyway, we'd love to have you here, guys. That's all I'm saying. At the end of the day, beyond the education and everything, it really is, it's just about the people that we've got in there. I'm seeing so many great friendships coming up there, and it's because, believe it or not, most of our members stay with us 6 months and longer. We've got so many members in there that have been with us. This right now, right about today, the 9th of September, right around there, was when we launched in 2017. We are 3 years old officially. And we've got people still from that very first day we launched that's still with us today, guys. And people have been with us 2 years and a year, and then, of course, 6 months and whatever. Very few people ever leave. And when they do, 90+% of the time, it's just because there's a financial situation. That's really what it is. For everybody we've had here, I think we've only, from what I've found out, we've only had a very, very minute few, maybe less than 1% of actual members that we've had who've left because they didn't like what was going on. And when we further discussed with them what was going on, they just wanted, basically what it came down to is they wanted somebody just to give them buy and sell signals and to monitor the charts for them all day, every day. Come on, guys. You're not going to get... Even if I was to offer a service like that, you sure as heck wouldn't be paying just $100. That's a lot of work. you would be paying a lot more than $100 a month for something like that. Nobody does that. But what you do get with us is you get education, and a lot of it. And that's what's going to make you successful over time, guys. Not somebody just spoon feeding you entries and exits, every day. You're going to lose more money in the long run with that than you won't. But if you combine the education we give you with the setups we do and everything else we do, man, you're set. I mean, it's hard not to get ahead if you're doing that and really kind of applying it consistently. But at the end of the day, guys, it all comes down to risk management. No matter how good something does or doesn't look, you need that risk management to protect yourself, because absolutely nothing is guaranteed. Anything can happen at any point. So just make sure you guys understand that. The chart request. Hey, Telluride, good to see you. He says this is a pretty nice benefit, especially if you're not confident in your Elliott Wave. Yeah, I forgot that. If you're tier 3, you get to request charts too on anything that we can chart. And the best part about that is maybe you don't even know what to look at, everybody else is asking, so you get access to all those charts. So like yesterday alone, I think I only did like 4 or 5 chart requests yesterday, but I did that in addition to I think we had about 20 setups between stocks, Forex, and crypto for hot takes last night that we did, as well as the 20 daily and intraday updates that we do. So, I mean, yesterday, you could have looked at, if you're tier 3, 20, 40, almost 50 different charts yesterday. Yeah. So, a lot going on. And that's just from me, guys. That doesn't include anything Scott does or anything the rest of the members do as well. So, when I say we've got content, I mean we've got content, guys. Let me see here. Let me check out who else is here. We've got, Lamb. He says, I've been tier 3 since infancy. Lamb's been around with us almost, like I said, since back at the beginning, guys. And you'll feel a lot of people like that as well. Hey there, KRN. Good to see you. 263Z. What's going on? Good to see you there. Casper. Hello, sir. Block Tech Management checking in. Let me see here. Excuse me. Alec, what's going on, man? Happy Friday. Let's see. Hank, what's up? Brian's here. KMG says the trainings are great. Glad to have that comment. Thank you so much. Let's see here. Mr. Yoon checking in from Hong Kong, it looks like. David from Hong Kong, he says. I will try to remember that's David, all right? I'll do my best. I might need a couple of reminders, but good to have you checking in. Glad to see you're here as well, Carol Hack. Finally, coming back in with us. Alfredo's here. KFG says he believes he's at 6 months or more. I believe you're right. Yeah. I think you've hit that half-year mark there coming in. Who else we got there? Silvio's here. KMG says he joined around February 2020. Silvio checking in for the Netherlands. Silvio's been around with us for quite a while as well. Good to see you. Darren's here. Can you chart the national elections? What is it that you would like for me to chart on that? I'm sure I can probably figure out some way to chart something on that, potentially. Yeah, I haven't done it yet, so it might take something for me to take some time to figure out, but I'm sure I could. Let's see here. Hey there, Mads. Good to see you. Mustafa, good to have you as well. Tahir, checking in. What's going on, man? Good to see you there. Depressed Gamer checking in from India. I hope you're not too depressed, my friend. Let me see here. Digital Mining Solutions. Leighton, what's up, bud? Leighton's been following us forever and a day. Checking in from sunny London today. Nacht is checking in from Brazil. Spiral Architect, good to see you guys. Let me see here. So let's go ahead and check out what's going on here, guys. Today's Friday. We'll kind of take a look at the market, see what's going on. Really excited to have you all joining in as always. And if you're new, hopefully, if this is your first time, you'll find a lot of reason to come back. We'd love to have you continuing to check in. We're a pretty friendly bunch here. All right, so what's going on, guys? Well, nothing's really changed this week. Again, at the end of the day here, what we're looking at is this red range right here, which basically runs you from about, let me see here, from right here about 10,500 to about Swing low down there around 98.75, 50 or so. Really, at the end of the day, guys, what you're looking for is a break out of that, which is a break above, or a break down, which is a break below. Okay. Again, as I've been talking about, if we break out above that resistance right there, your initial target should be this. What is this? This 10,603 to 10,626 kind of area. If you continue up from there, then you should probably be looking up here at around 11,300 to 11,310. If you break down, though, again, initial target right down here at around 95.50 at the EQ here, 95.55 of this demand structure. But really kind of looking at a target down here of this box at 9,040 to 91.20 or 30 kind of area here. That's really kind of where I'm looking to get. And I still think we're probably headed that way. As long as we're staying below this swing high up here from the 10th, so yesterday. As long as we're staying below this swing high right there at about 10,483 or so, this count continues to work. If it goes up above it again, it gets above that trading range resistance there, you just go a little bit higher up here potentially. This just fills in that CME gap. Remember, guys, we've got that CME gap on the top here. Didn't quite fill in. The CME itself actually went to 10,565, so it went higher than the spot market did there. Like I said, 10,565, but it's got to go all the way up here to 10,620 to fill in that gap. So you're still looking at 35 and 20. You're still looking at about $55 above this swing high yesterday to fill in that gap. So we'll see what happens. I mean, as you can see, price kind of hanging around that daily S2 pivot here on the CME. But you can also see that RSI has not actually dipped into oversold yet, which suggests that when it gets down this close and it doesn't quite get in, most of the time that means it'll usually, might just get a bit of a bounce here and then head further down. Now, if you'll remember, a few days back earlier, beginning this week, I've talked about the possibility of this being on ABC or a WXY or whatever you want to look at here. But I said I could see it going sideways here for the rest of the week and kind of creating what becomes more like a 1, 2, 3, 4 to get us a 5 down here that fills in that gap. And so, so far, that's kind of what we're doing at the moment here. We're still just kind of moving sideways here, guys. So no real big revelations going on here. We've got a couple of different time frame supply or demand structures here. Basically, if we're declining below this swing high up here, this 10,380 kind of area, if we get rejected prior to that and we come on down below this swing low at 10,200, my thought is basically that we'll do something along the lines of this here. We'll come down, bounce off the top here at around 99.80 or so. Rejected, hit this 10,140 kind of area, and then finish off down here around 99.15 or so. And that just basically finishes a 1 here. And so if that's a 1, then your 2 should then pull back here to this high volume node right there around 10,260, 10,280 kind of area. So you'll get a 1, 2, 3, 4, 5. And that actually, that aligns with what we have going on here, but it also gets priced down here where we would expect it to 91.20 or so. Where we would normally expect, this being a 3, this potentially being a 4, and then this being a 5 coming down where we would normally expect 5. So it aligns real well there. So as long as it kind of, rejects prior to that swing high, that's kind of overall what I'm looking for it to do. For right now, at this time, I don't see a reason really kind of set itself apart that really says strongly that price should go up and make new highs from here. Basically that this is potentially an ABC or something like that. It's possible, but what's going on here right now does not strengthen the case for that at all yet. Right now I'm still looking at as possibly 5 waves down. And so that's kind of where we're at the moment, guys. Really, there's nothing more going on with that. We'll see what's going on here. Now, if we check on over here, again, the DXY kind of controlling everything here. And the DXY is doing its thing here. And so this morning, I discussed with Discord there in our morning update the idea that we've potentially got a expanded flat going on here for 2. So right now, I've got this as a 1 and this is a 2, ABC down here. But it only hits the 50%. And I'm always suspicious when a wave 2 doesn't get down to at least 61.8. So if I look at this, and I look what's going on here, and I'm looking at how hard the Stochh RSI is working, and where RSI is, I'm seeing a possibility that we could have an ABC down as an A, ABC up as a B, and then 5 down as a C. So have a flat play out here. So if we have a flat play out here, basically, more or less, Bitcoin should just kind of continue this overall sideways thing. Now, that may mean it gets up there to, to this 10,620, 10,630 kind of area. But in the grand scheme of things, it's, this is still sideways. Even if it makes it up there this weekend or something and then comes back down. I mean, that's still sideways. You won't have any direct DXY pressure on Bitcoin, once the Forex markets close later today until Sunday afternoon, my time. Early evening. Yeah, I have 4 or 5 o'clock, whatever, Central Standard Time. So Bitcoin, it'll be loosened up a little bit. It'll have a little bit extra room that it can move. But I think it still kind of remains sideways. And it's still possible, guys, that my count is not correct here. I think it is. It looks like it's working like it is. But really, I need this move. I want to get comfortable by getting a move above this 95, 45 kind of area up here. If we can get above that, I'll feel a lot more comfortable about this being done. As a matter of fact, we don't even really have to get up there. We just have to get above this descending channel resistance. If we can get above that, I'll feel really comfortable with the fact that the bottom is probably in. Until then, I'm going to still struggle with the idea that maybe I've got the wrong count on there. Now, the other way we can look at this, I hate heads and shoulders and whatnot, but I think there may be a case here for a possible head and shoulders maybe to print out here. If this does a expanded flat kind of thing, you'd be looking at something like that maybe. I could see something like that. So, you get this move up here and then the move back down. If it's just a regular flat, then maybe you have a complex head and shoulders here that has 2 right shoulders. If it goes down lower, that kind of increases the odds that it's just the 1 shoulder there. It all depends on where this goes. Does this print a higher high and get an expanded flat? I could see something like that, where maybe we kind of push up to here. So you have an A down and then B up and then C down. Because if we actually look at this and go, okay, well, if this is A and this is B and this is C, generally we'll look for wave C to equal wave A. And so that happens here at, right here, about 93.87. So pretty close to where I pulled that. So we could see something maybe like that going on. And then in which case you'd have a decline down here, probably down to the 61.8 kind of area, which, at the end of the day and what's going on here, that would probably be I could see it as the EQ of this descending channel here. And so then we get a head and shoulders maybe that looks like that. And then, of course, if that's the case here, you're going to grab this height here from the head to the neckline. And on the breakout, wherever it breaks out, that becomes your target. Oh, man, look at that. If it broke out over here around the 18th or so on something like that, maybe it gets it right up there about where I'm expecting wave 3 to get anyway. Now, this is something I hadn't been looking at. This is something I just looked at as I was talking to you here. So I haven't even actually really kind of looked into this. But, again, if we're getting an expanded flat up here as a 2, that would be the likely target, the likely pullback, down here around that 76.8 or 61.8 or whatever. and then the move back up there. And that's actually a pretty well formed head and shoulders there as well. So, if you think about markets in the way they are, if you accept that the stock market is maybe at a top, this initial pullback that it's doing right now, this wave 2 kind of thing, could be more spread out as selling continues to come in, hindering all the buying that's trying to come in, the people that bought the dip. And that would give us this, this longer sideways kind of potential action toward, mid or end of next week, maybe even. Possibly. This is just one idea, and I'm not really a big fan of head and shoulders usually anyway, but just something to potentially watch. But I think we may be actually building this wave 2 flat correction here. Now, obviously, if it continues up here, it continues going on up, well, the wave 3 target is where it is, way up here at around 95.82. At that point, you're above my range here. You're above the descending channel resistance. I mean, you should be expecting to go up at that point. And again, if the dollar is rising in value, everything else is denominated in dollars, generally should take a hit. All else things held equal. I don't get overly excited and try to don't get bored and try to make bad decisions with trading Bitcoin at the moment here. Keep the bigger time frame, the larger time frame, the larger range, and these kind of targets out here really in mind more than anything else. Stop trying to enter mid-range here. That rarely ever ends up well. You've got a lot better chance if you're shorting a rejection at the top of the range here, or you're buying a bounce at the bottom of the range. You're usually set up for a lot better opportunity to actually be profitable on that. Let me see here. Oh, let me catch up with you guys here. Oh my gosh, you guys have really been talking here. Let me see. Let me catch up with you here. Carol's asking what I think about Bob said in his most recent tweet. I think you're probably talking about the one where he said if you're spending more than an hour a day and you have less than 250 grand in the market, then you're doing it wrong kind of idea. I mean, I think what he's trying to say, guys, is the same thing I continued to say. Being a successful trader does not mean you should be sitting in front of the charts 24/7. The idea is that you should be not trying to play the 5-minute, 10-minute charts. You should be looking at, maybe the 4-hour chart or something like that, larger time frame. It gets rid of a lot of the noise, which means you spend less time looking at it. I think that's probably what he meant with that more than anything else. I don't know that the size really makes a whole bunch of difference either. Really, guys, I'm going to be honest with you. If you're trading in size, it's no different than trading in smaller size. The only thing you have to become aware of is the market you're in. How liquid is that market? The more size that you have in a trade, the more liquid that market that you're trading necessarily has to be. And what I mean by the market is not like, the stock market. I mean like the stock you're trading. If you've got, for instance, 100 grand in Apple that you're trading in Apple, you want to make sure Apple is liquid enough that you're not going to, lose, that you're going to be able to get in and out where you want to get in and out without suffering a whole bunch of slip as you try to get out. Because remember, guys, when you enter a trade, the exchange or your broker or whatever, they don't, it's not like you say, okay, listen, I want to get out. If you're in Bitcoin, you say, listen, I want to get, I'm long and I want to exit at 10,400. Well, the exchange isn't required to get you out at 10,400. The exchange is just the middleman. They're the one who propagate, who make it possible by bringing together buyers and sellers, by trying to create that liquidity. Now, they hire people called market makers. Again, guys, I see a lot of people talking about market makers, as whales and manipulators and whatever. That's the dumbest thing I've ever heard. And I'm sorry, guys. Sometimes I'm pretty blunt about this, but that's just it's perpetuated so much through crypto Twitter and other social media. And new traders come in and they think that a market maker is somebody out there manipulating the markets. That's absolutely asinine. That is not what they do. A market maker is hired by the exchange or broker or whatever it is to provide liquidity. They are there to, as much as possible, try to help your orders get filled at those orders. Because here's the thing. If you're on a particular exchange or on a particular broker, it may be heavily skewed to buyers or sellers. But you can't execute a trade unless you have somebody on the other side of your trade. So if you're trying to execute a trade, say for, again, let's use round numbers. Let's say $100,000 worth, right? At 10,400. And there's only enough you want to sell there, right? You only have enough buyers there for $50,000. Well, guess what happens? If there's nobody else there going in, you only get 50,000 of yours filled. If you've got people ahead of you, they take the orders first, and then whatever's left complies to it. The rest of your order does not get filled right there. Price pushes up until you find more buyers willing to get in for your sells. The market maker comes in because it's rarely ever enough market participants on the other side of your order or on the other side of everybody's order to make sure that there's enough liquidity there so price doesn't spike or, dip huge, fast and hard and create all this slippage. So the market maker comes in and says, listen, I'm providing liquidity at these levels that isn't supported by the market. So if you have a bigger buyer-sell order coming in and you need additional funds on the other side of that order, that's what the market maker does. And they get paid a commission to do so. Now, the market maker does not want to hold on to whatever they just bought, because the longer they hold on to it, the greater the risk increases that they're going to lose money. The idea of the market maker is they want to get in, provide that liquidity, get the heck out. So if you're trying to get somebody to buy, they come in with buy liquidity. And now all of a sudden they own whatever they just bought from you. Their goal is to get rid of that as quick as possible. They're not going to hold it and go, oh, you know what? TA says it should go up here. No. They're trying to get rid of that as if they could sell it the instant they buy it. That's what they want to do. They're already making money on the trade, on providing that liquidity by the exchange. The exchange is paying them to provide that liquidity. So again, if they're buying it there and price dumps on them, guess what? They're losing money. There's nobody there to bail them out. They're not dumping liquidity on the market either because they can't throw it out of balance. So for those of you who thought that market makers were just these whales out there manipulating and buying and holding and whatever, it's nonsense, guys. That isn't what a market maker actually does. They provide liquidity at the point of the transaction. If there's not enough there on the other side of the trade. So that way, you're trying to get at 10,400, and hopefully you don't have to have the rest of your orders executed at 10,500 or 10,800. That you can get out right there where you're trying to get out. Or, heaven forbid, that it drops the other way, and you're not getting filled. If you're trying buying or selling or whatever, it's doing the other thing. The idea is to try and get you in and out as close to where you planned to enter or exit the trade as possible. But because the exchanges, don't do this, they're just the middleman. Just because you put an order in there, a sell order or buy order at a certain price, doesn't mean you're going to get out there. So that's why you want market makers. You want that extra liquidity in there to lessen the idea that you might have slippage on that and potentially lose money on the trade, or at least not gain as much profit as you thought you were going to. So that's just a quick update there. I've done this a couple of times, explaining to you guys what market makers are. That's what a market maker is. So don't listen to anybody on Twitter that says market maker and then proceeds to talk about how they're manipulating markets. It's the most asinine thing ever said. All right. Let me see here. Alexander, what's going on, man? Can I take a look at QQQ? Sure thing. Sure thing. I'll remember to do that here in just a bit. We'll take a look at the cubes there. Let me see here. Hank is saying, oh, okay, yeah. Talk about the CME gap. I guess you saw that I was talking about it. Okay. David is curious how I trade this period when it's uncertain and moving sideways. Basically what I said, I'm watching the range. Guys, when you're a new trader often, you don't have a lot of money. And so the idea is you want to build up your capital as fast as possible, right? You want to get as rich as you can, as fast as you can, right? The problem with thinking that way is when you get into ranges like this and you start forcing trades. Honestly, I'm not interested in a trade that isn't going out here or down here right now. Now, in here, if a situation arises where you have like some bullish or bearish divergence building up and printing there, or a pretty clear Elliott Wave count, or a rejection at a supply structure, or a bounce at a demand structure, HVNs, rejections, or bounce off that. I mean, those will give you possible opportunities to enter a trade in there. But generally, if price is going sideways, the best thing you can do for yourself is wait for it to you can either short a rejection at the top of the range here, or you can buy a bounce at the bottom of the range. If it continues going through, you can sell at the bottom of the range because it continues to go through. Or if it continues to push on up through here, you can buy and go long on that. But most traders, they'll make this money. This isn't a problem for them. But then they'll lose all of what they made here, and generally more with all this. Because they continue trying to sell, the rejection, and then they change and go, oh my gosh, no, it's going the other way, so I got to buy the bounce. And so they keep losing money as they try to play that range. Now, there are other ways to trade this, and these are things that I've taught over the last 2 months. Every Wednesday to our Tier 3 members. So if you guys want some specific techniques of how you can trade ranges or anything else, you can just trade naked price action here. This, without even this over here. Turn all this off. If you want to be able to trade this, I've taught some great techniques over the last 2 months to our Tier 3 members that you can use to trade this here. I've also given them some other techniques using indicators in different ways. The ones we did this past Wednesday, was using the MACD in a way, in a couple of ways that apparently it blew everybody's mind. Everybody thought you just had to use the MACD the way it sits when you first get it. No. And so we're going to continue to show them different ways that use indicators like that. In creative ways to find definitive entries and exits and stop losses and all this kind of stuff that we continue to do there. But if you join Tier 3, you'll get access to all that, almost 10 hours of content over the last 2 months. It's just, an hour to an hour and a half every week on Wednesdays that we do that. And you'll get access to all the previous ones, plus, of course, every Wednesday coming up there. But yeah. Let me see here. But yeah, so there are specific techniques that you can use with trading there. But just in general with trading, it's a range right here. Your safest bet is to wait for a breakout or a breakdown. But again, there are techniques you can use within it. But I'm not going to go here and teach it all here. It'd be kind of crazy first of all, it's what we do at Tier 3. But second of all, it would take hours to teach all those different techniques that you can do here. But there are definitely techniques available. And if anybody thinks I'm blowing smoke up your rear ends here, I'm sure somebody will chime in from Discord that's listening in right now and let you know that I'm not. I'm pretty honest here, guys. I'm not here to just take your money or lie to you and make you just pay me money and move on. My goal is to bring you in and hopefully keep you in for a while. And the only way we can do that is providing good content, right? And constant content. Let me see here. Hank says the GBTC is littered with gaps, but I guess that is such a low volume asset it doesn't really matter. Yeah, exactly. Some of them are like that. Some stocks get like that. GBTC is the Grayscale Bitcoin Trust, and so when you've got low volume like that, you often have gaps all over the place. Not a whole lot. You don't worry about the filling of the gaps there. Chemo, what's going on? He says, how about the idea that wave 3 isn't even finished and finishes at that gap fill? Which gap fill and which wave 3? I assume maybe you mean, I'm going to assume here that you're talking about maybe this is a wave 3 and the gap fill down here is the finish. My thought with that is, well, this would have to be likely a wave 4 within here. So where's wave 2? Is this wave 2? And if this is wave 2, that's a very small wave 2 and it's a very large wave 4. And, when it comes to Elliott Wave, most often you're looking for a general relationship between the sizes. You usually don't have a very tiny, like wave 2 and a very large wave 4 the other way around. Usually, they look like they belong together. If I'm looking at this, I go, maybe a 1, 2, and then you have a 1, 2, 1, 2, 3, 4, 5 gives you a 3, 4, 5 here, possibly. But again, even my count here could be wrong. There are other ways to count this in which you can get a wave 3 down here. So that would make this a 3 here, this 3 potentially here with this 4 here, and a 5 here, or even this 3 here, this 4 up here, and this 5. So then this larger 3 becomes here, and this all becomes wave 4. This larger wave 4 is still kind of playing out higher. Because of all the overlap, there's multiple ways to kind of count that. So I just kind of go with the bigger movements here and what I'm looking at. This as a wave 4 relative to this as a wave 2 makes a lot more sense to me than this is a wave 4 relative to this as a wave 2. So, if you're asking about how about a wave 3 still continuing down, that's initially the way I would look at that, why I would kind of look at that. Now, obviously the other thing we can look at, of course, is, how far have we gone down here? Usually with wave 3, we're looking at 1618 at least. And so if we get this wave 1 here, measure it out. And then we put up here wave 2, so where wave 3 starts, we hit the 1618 down here, my wave 3 right here. We've hit that. So that's a pretty good indication. That's potentially a wave 3 right there. We've hit the 1618. So, again, you can look at a few different things like that maybe, help you lean one way or more than the other. More than just the way in which, it relates size-wise, but also where are those extensions going and can you get a valid count out of that down and whatnot. So, yeah. Hey there, Esteban. Let me see here. What's going on, Dong Man? D-Dong Man? Double D? Says, I've only recently started following the DXY. Does the rise and fall of the dollar usually move markets, or is it more important these days because of such odd, bubbly market conditions? Well, it always does. Think about it this way. If the value of the dollar is rising, so if the DXY is rising relative to the 6 currencies, the dollar is relative to the 6 currencies that, the basket of currencies that make up the other side of the DXY there. So, your Euro USD, your USD Yen, all those things. If the dollar is rising in value, because against those currencies it's rising, that means it's cheaper to buy the things you want to buy. Their pricing, everything else held equal. If you're buying something with a more valuable dollar, that dollar is worth more, right? The dollar, don't think of it any different than what you think of gold or Bitcoin or whatever. A higher price means it's more valuable. It means it's worth more. It means it can buy you more, right? So, that's what you're kind of looking at with the dollar there. Now, it's been a weird 10 years here, kind of the way it's moved up here. And that, I think, has been an extension of this credit bubble. But generally, what you're seeing now, which is the DXY moves one way and the markets move the other way, it's potentially even more, expanded in the way it's doing it here. It's a stronger reactions on everything else because of the credit bubble. It becomes all about dollar liquidity. If the liquidity of the dollar, if there's less dollars available, the value of it's going to rise. And so we get that dollar liquidity because it's a credit bubble. It's this credit contraction that we've had. Again, as I've been pointing out, since March, in May of this year, the U.S. had the highest savings rate ever, something like 30%. It's never been that high in the history of the U.S., okay? At least, whatever they've been recording it for, decades or centuries or whatever. So we had that there in May, and it's still really high. So people are saving money rather than spending it. And in addition, we know that banks have been tightening their lending standards. So you have to be more qualified to get a loan today than you had to be prior to the February-March drop. It is more difficult to get a loan today. And so those who would even want to get a loan have to be even more well capitalized and better credit to even get it now. But the problem is people in general aren't taking out new loans. As a matter of fact, they're paying off those loans. So everything is contracting credit. And contracting credit, it means that less dollars are circulating out there. And less dollars that are circulating means if you still have the same amount of people looking for them, there's less available dollars. That means they're willing to pay more for those dollars. Again, all basic economics here. So the value of the dollar goes up. Now, there's a whole bunch more intricacies in there, guys. As I've every once in a while kind of pointed out. But that's the gist of it. So yeah, if the DXY is rising, in general, you should expect a decline with assets that are denominated in it. Because you can get more of that asset for less dollars because the dollar's worth more. But I do believe that at this time, the effect is pushed even greater now. I can't think of the word I'm looking for. It's happened earlier this week, right? But it does so just as a result of this, being kind of at the top of this credit bubble, it seems like, that we're at right now. And that, if this is in fact the everything bubble, the credit bubble, you go, okay, well, maybe we'll just have a small recession or a bit of a pullback, but it won't be anywhere near depression-esque. Well, the reality of it is, if this is the popping of that credit bubble, guys, you should expect a very hard, and a longer decline, depression-esque decline, because what you're doing is you're unwinding all that credit that's grown out of the last, 80 years? And since the 1940s, since the New Deal, really? And then really expanded after the 70s, after taking off the gold standard and whatnot. And then again, there expanded even more, in the late 80s, early 90s. So really that's what you're trying to unwind with this reaction. And that's why it would be a larger, decline than most people expect, if it turns out to be. Again, that's my view of what's going to happen, but it doesn't, guys, everybody, even the Fed right now, is not, they can't guarantee what's going to happen. They've been trying to get inflation going for 10 years now through QE, and they haven't been able to. Matter of fact, they've had deflation in that time. And that's saying something for as much money as they pumped into the system prior to what they had, ever before 2010, before they first initiated QE. The idea that, it's more, it's more significant now because the dollars are more, you're missing the forest for the trees, guys. When QE was first introduced in 2010 that was a significant increase in liquidity prior to what it had. The QE that we had here this year was another attempted significant increase in liquidity over what we had previously. In either case, they're both significant, a very, very significant increase. It doesn't matter that this is more this time. It doesn't matter. Because at the end of the day, if people aren't believing that the economy is going to be fine and they don't have faith that everything's going to be fine, then they are not going to take out loans. They are not going to spend frivolously in general. They're going to save. And why is that even a bigger thing? Because most of the money right now is locked up in the baby boomers. The people who grew up, the people like my parents who were born in the 50s, who grew up with stories from their parents about the Great Depression, just, 20 years before they were born. And they were raised with that understanding. And here they are in their 70s now. The last thing they're going to do is go out there and make stupid moves. They're supposed to be retired. They're not going to blow all that retirement, just because, everything's going to be fine. No. But a lot of young people today fail to recognize that because they can't see the world through anything other than their own eyes. And, that's one of the hardest things we do as humans is try to get beyond what we believe is going on because of our social circles, our age, our experience, our education, all these things that kind of affect the way we think and things we do. So, yeah. Let me see here. Let me see here. We gotta catch up with you guys. Let me catch up here. A lot of good conversation going on with you guys here. Let me see. Oh my gosh, I'm trying to catch up with you guys. Sorry, just trying to see if we've got any questions here going on before I continue on looking at some other things here. Hey, Cornholio, what's going on, man? He says, hey, Chris, is it advisable to hedge the spot Bitcoin to protect it against the coming drop? You guys, I'll be honest with you guys. I see a lot of talking heads out there who discovered hedging in the last year or two. And they all talk about how great it is and how you should be doing it. Guys, the reality of it is most of y'all shouldn't be getting involved in hedging. Hedging has more moving parts, if done correctly. If done incorrectly, it still has a lot of moving parts. But if done correctly, it's got a lot of moving parts, guys. And most of y'all are still on your, basically on your training wheels as far as trading goes. The last thing you want to do if you're just learning to ride on training wheels is jump up on that rocket-powered motorcycle, right? It's the same thing I hear. A lot of new traders want to get into options because everybody's talking about how great options are and how easy they are. Easy to lose money, yes. Options are not your instant, this is how I can make money kind of thing. Options are an advanced form of trading. And it is different. If done properly, you're talking about deltas and decays and the Greek letters, all this thing, man. If done correctly, it's completely different than what you're looking at the chart here. But it is an advanced skill set. I can't even say it. An advanced skill set. Options is. But again, because you have a few talking heads talking about how great it is online. New traders end up thinking, oh man, I can just jump in there and make all this money. It's so much easier than trying to figure this out. No! It's something completely different. It's a more advanced form of trading. It's the same thing with hedging, though. I think you're better off in general if you're trading with good risk management. Less moving parts. If risk management is done correctly, then if you do sustain a loss, it's very small. It's nothing that's going to really affect your account. But again, why do new traders often talk about using hedging and using options? Because they want to get as rich as possible, as quick as possible. But again, it is that precise thinking that keeps you poor, that makes you give the money to the market. So people like me and others can just, take your money from you. Because we don't have that. We're not looking to get rich overnight. Larger time frames, more muted movement. Takes more time, but you have a lot more chance of being correct. if you end up staying in trading long enough, most often you end up getting to that way. You move out of the short-term thinking into the longer-term thinking. You don't try to become a millionaire. You don't try to start with $100 today and become a millionaire next month, or some of you guys tomorrow, next week. But you don't do that. You kind of, as you become experienced with the market and you see how it moves, and you see how things are, and you see that you are your own worst enemy because of this impatience, you start to take on a little bit larger time frame. And you start learning that, okay, I can experience more profitable wins here without as much work, without as much stress and headache as what I'd been doing previously. So, yeah. But yeah, so, honestly, you can try hedging if you want, but, I think for most newer traders, which means anybody that doesn't have a good grasp on the market and is consistently profitable, I think hedging just adds in too many extra moving parts if done properly. And, it adds in too many extra, hiccups here, extra moving parts, whether it's done properly or not. And you have to do it properly in order to make money on it. Otherwise, you can end up losing more money than what you would have lost had you not hedged. The easiest way to make money in the markets is to buy and hold, guys. That's been true for, hundreds of years. It's still true today. Most people just don't have the patience for that. And so you got to start giving. The less patience you have, the more risk you have to take on. There's always a give and take. Nothing is free in this world. You always have to pay to play. You just have to decide how much are you going to pay, how much are you willing to pay to do it. Let me see here. Clarkman, what's going on? He says, Chris, Bitcoin is boring. Could we look at Ethereum today? Maybe. We'll see what we can look at here. It's a bit hot, super hot around there. Send some bit of rain your way. Man, you're a long way off from me, man. I don't even know if I had the ability to send rain next door, much less way on over there. Phoenix, what's going on, man? He says, got in late today. Did you say that it looks like it will go to 10.6 over the weekend, possibly, then headed down to low 9s? And good morning. No, I didn't say it's going to. Matter of fact, I said it's possible. It's possible. My bias right now is that wave 4 is complete and we're kind of heading down lower to fill in that lower gap. But it's just my bias at the moment. That can change as price action changes. I would look at 10.6 if we're getting above this, above that red range there. Don't forget, guys, if you're in Discord with us, and I give those BMA, those trading view analysis, you can always make that chart yours. And then that way all the stuff is on there already. So you don't have to guess where these levels are. They're already on there for you. And so that way you can kind of make it up there. By the way, when I do my chart request and my setups and all that, guys, I actually I provide live charts. That means our members are actually able to take those charts, and they're not just published charts, they're live. And so anything I update in that chart is updated on their live version as well. So it's always updated anytime I update it. That's something I've noticed, from what I've heard, nobody else really does. Everybody just kind of gives you, written words or a picture. But I give our members actual live charts. So you can copy those parts of the chart that you're interested in onto your own chart, or you can just use that chart itself, for watching where price is going to trade. Phoenix says, yes, excellent content. I'm an experienced trader. I've never used technical analysis. You kept me from going over the edge more than once this week. Thank you. Looking forward to the tier 3 sessions. Man, awesome. Glad to hear that. Phoenix is new with us. So there's, you've heard comments from people who have been with us a long time, and now you just heard a comment there from somebody who's actually new with us. And so, again, guys, my goal is to help you understand what's going on with the markets. It's not to convince you that I know what's definitively going to happen. Because at the end of the day, as long as you know, as long as you get a better understanding of what may be going on in these markets, you use it, with the way you're looking at the market to decide what you think is going to happen. You're the one trading your money. You guys have to take ownership of that. And the more you do that, the more likely you are to take risk management seriously. But that's what it's all about, guys. We're constantly trying to make it better and better, and just provide better information, or even the information we provide to provide it in a better way. Again, talk to anybody that's been around a while. They'll tell you about the changes we've made over the years to provide more content and better content, and to better deliver that content in a more understandable and actionable way for our members. So, yeah, constant work here. Let me see here. If DXY is pumping like you just said, will crypto and stocks go down? Negative correlation. Yeah. I mean, if DXY is going up, my expectation is all other markets are going down. Everything else is risk on. That means as long as there's no pressure on them, they should rise. But if there's pressure and an advancing dollar is pressure, then everything else held equal, we should expect their prices to drop. Now, like I said, of all the assets, gold, silver, precious metals, stocks, Bitcoin, cryptocurrency, whatever, I think Bitcoin's got the best chance of coming out well ahead at the end of the day. But it's still going to take a hit at the beginning, guys. If DXY is doing what I think it's doing, then, we're still going to see Bitcoin take a hit, which just means all it's doing is finishing up its correction, guys. It's not that it's, oh my gosh, becoming bearish all of a sudden. As I keep telling you guys, zoom out to those weeklies. Look at the ideas there. Even if Bitcoin was to drop down to 2,400 or 1,100 or something, yeah, you go, oh my God, that's awful. But the opportunity that presents to you is amazing if you have the right mindset when it's happening. Like I said, right now, that's what I think is going to happen. But we have different levels we're watching. We got potential bullish scenarios playing out that need to be invalidated first, which is why I always talk about working down these bigger levels where we're looking at. But if it gets down there, it gets down there. It's just a part of the overall correction. And if you think of this as a large wave 2, after the first 10 years being a large wave 1, it makes sense. Because now you're purging the system of all that excessive speculation. So far, with the dip down to 3,000 and that little dip down to 4,000 or whatever in March, we haven't actually purged anybody that bought after that basically bought in 2017, that bought after the when price went above the 2014 swing high there, which again, like I said, I think was about 2007. It's around $1,000 or so. Between that and $3,000, $4,000, you've still got people holding from above that as well. But a drop down below that 3,000 all of a sudden puts them on notice. And I think that's the purge I think that the market's still waiting for. Because as long as they still have money in there, they're still willing to potentially sell on some movements there. You got to, the market's going to check them and see, are they really serious about holding on long term? Because the more money that's not serious about that means the more supply that's going to come out on the market. And the more supply that comes on the market, the more upward advance is hindered. There's this nonsense that goes around that continues saying, oh, because Bitcoin is limited in the number that will ever be produced, that it means it's necessarily bullish. No, it's not. You could have one of something, but if you don't have two people bidding over that price, it's not going to go up in value. You have to have more demand than supply at the time to push price up. It's not just about lessening supply, because the reality of it is it's more supply coming onto the market. So you have to have even more demand coming in to mute that supply. But then you also have to look at everybody that already has supply and whether they're willing to drop or not. Everybody got excited over over MicroStrategy's buying 250 million of Bitcoin recently, right? Where did they buy it from, guys? Somebody had to sell it. It's not one-sided. And I think as soon as you can get a hold of that, I think it helps kind of tone down that emotional trading that you often feel necessarily. But the idea that only supply matters is just bull malarkey. It's bull hockey. Bull hockey is stinky, all right? But anyway, yeah, so just saying there. Let me see here. Let me see here. That is the word you were looking for, training wheels, Phoenix. By the way, if you guys haven't checked out my Twitter, I told you I would tell you when all of a sudden the word hit me what I was looking for earlier this week. If you were with me back then, you know I was struggling Tuesday or Wednesday to figure out what that word was that I was trying to use. Have you guys checked my Twitter? I put it up there yesterday or today. I think I put it up there today. So the word, it's not the bird. The bird isn't the word. It is soundbite. That was the word, the phrase that I was looking for. Everybody out there is just interested in sound bites. They're not interested in really understanding. So somebody says, oh, blah, blah, blah. And they go, oh, hey, yeah, look, that makes sense, without even thinking about it, without really going any in-depth thought. And they just perpetuate the myth of whatever that sound bite is. Again, money printer goes burr kind of thing. It's just a sound bite. It's a meme. But soundbite was what I was trying to get at that day. I appreciate all y'all that joined in and tried to help me out. We all sucked that day. I couldn't come up with it. By the way, guys, real quick here, make sure you watch this video right here on my Twitter. It's at TX West Capital. So I guess there's a thing called FinTalk now, Finance TikToks. So this guy talks about SPXL, which is a 3-time leveraged ETF, and basically says, oh, guess what? If price moves up 1,000 points, it's gonna. If you're long on that, you're gonna go up, 3,000 points in profit. You're gonna make 3 times as much profit. If that's what you know about leveraged ETFs, run away. Do not touch them. They are subject to extreme decay because of the way in which they are done, especially the bear ETFs. Because every day that has to be redone, the ETF has to be adjusted to put it in there. So the odds are, over time, you're going to lose money on a leveraged ETF, guys, due to the decay. And then you've got the management and fees, which are usually a lot more expensive than what they are in most places because of all the work that has to go into doing it. Because it's not just buying a few things and that's it. Especially on the bear side. Again, it's what they're trying to do is they're trying on a 3-time ETF to get a 3 times return on that day. It doesn't mean 3 times return over a month. And most of them rarely ever hit that mark. So these are things you guys absolutely have to know. Understand how much you're paying in fees and whatnot, so you're not sitting there holding it, and then a week later, all of a sudden, even though everything's gone up, you're down. You get, liquidated. I say liquidated, you're down because you're owing more in fees than what it's actually generating in profits on that. But again, this is the type of thing, guys, I try and help you with. This is why I do what I do. Because of nonsense like this. You know why? How do I know we're at the top? Because this stuff comes out, guys. I say no, I don't know anything. Why I assume we're at a top. It's continual information like this. This stuff does not happen at the bottoms of markets. And if you haven't been through a few cycles, you don't understand that yet. But you will in time. If you stick in with markets and keep trading cycles, you'll see that this type of thing, and all the other things I've talked about, the minis, the micro, options and everything available with the CME, Charles Schwab, the Schwab slices, Robinhood, allowing you to get portions of stocks. All these things are things that happen at the ends of cycles, not at the beginning. They're making it easy so that the last bit of money from the smallest people can make its way into the market. Doesn't happen at the beginning. Happens at the ends. Does that mean that we hit the top right now? Maybe. Does it guarantee it? No. Remember, tops and bottoms are processes. The absolute highest or absolute lowest price are just events. And I'm going to be honest with you guys. Those are inconsequential. What you're interested in is the process. Is distribution going on at the top? Is accumulation happening at the bottom? That's what you're interested in. Let me see here. Data, yes it is. That is what it is. Let me see here. Hey, Suckalami, good to see you. Casper says you'll know when we are in a bear market. Dead giveaways that Chris tends to shave his beard less. Y'all in the beard comments, man. You guys make me laugh. I love it. I love it. Let me see here. Hey, what's going on, LXT? Good to see you. Okay, so let's go ahead and check out what these other markets are saying right now, guys. Shall we? Let me see here. Oh, I guess we can go with the S&P E-minis like we usually do. Gotta pull this up here. Oh, look at that. Hitting my initial Wave 5 target right now. Awesome, awesome. There we go. Looks like we should probably be about done here. I've got right now, I think we've got a 1, so like a 1, 2, 3, 4, 5 gives you a 1, A, B, and C here. So a 1, 2, 3, 4, 5. See, occasionally they don't. We were talking about why maybe a wave 3 down. Occasionally they don't necessarily look good relative to each other. It happens. But usually on the larger time frames, they're more likely to look as they should relative to each other than really off like this. But nonetheless, that would give us then wave 2 done there. And then possibly, again, 1, 2, 3, 4, 5 finishing up here. So I would just be looking for a bounce back up and then a continuation further down. Maybe a wave 5 down here around 31.15 or so. But, not getting any help up here with the OBV. You're getting lower lows on this, even though right now you've got higher lows with price. Volume tends to lead price. So volume here, this is OBV. This is smart volume, I guess. What you're looking at, your more professional traders, this is what they're doing generally. Or it's an attempt to figure out what they're doing. And so this would say, the way you would read this is you would say that they're selling here as retail's probably trying to buy. But when you get this negative divergence where you're making the lower lows in OBV and you're making higher lows or you haven't quite made lower lows yet with price is going to follow usually. So, again, stock markets, I don't see any reason to change anything right now. Still looking like they're heading down. Let me see here. If we look at the NDX, which is the NASDAQ. Let me save that real quick. There we go. We can look at the daily on the NASDAQ here. Oh, new lower low today. You can see our account has a 5 finished up here. We got this nice, likely reversal candle right there, confirmed with this large candle following. We've dropped out of the ascending channel here, this wave 2 channel. We're below the pivot. This is all on daily. We're below the S1. We're making new lower lows. I'm easily looking, next easy target is the S2 right here, 10,400. But I think the top is probably in. So, again, if this, I haven't zoomed in here, but if this is a 1, 2, you would generally look for, and it may or might not be, like I said, I haven't looked in yet, but if it is, you would generally look for a wave 3 around 93.41 here and a wave 5 down here at 88.13 at least. Now, what does that do? That takes you below this wave 4 and this larger wave 4, which suggests that this wave up is done here And so we'll continue to look for further down there. Obviously, as you can see, that would take you back down below the previous all-time high if we hit that wave 5. And so it comes right about that area, which makes sense. You'd expect to get 5 waves down right around here and then bounce up for 3 and then 5 down. And now you're really kind of looking at more likely than not continuation to the downside. So, your tech's not looking good, guys. I mentioned, for the last few months that when we saw Apple and Tesla and a few of those others like that, if we saw one or a few of those turn, that was likely going to be the beginning of the end, because that was going to cause the NASDAQ to drop. And when the NASDAQ drops, it's going to cause everything else to drop, because realistically, advances versus declines, the declines have been well ahead of advances, even though price has been rising, which means that the rise has only been due to a few really concentrated stocks. So necessarily, if one of those stocks or a couple of those stocks start trending the other way, the rest of the market's already heavy. There's nothing left to keep price up or to keep pushing it up. So that's kind of where we're sitting there now. Let me see here. Dow Jones, another more broad index here. Then NASDAQ is a very tech-heavy, specific kind of index. S&P, a little bit better, but not quite. Dow Jones, much more broad-based index here. Same idea, everything. The real specific indexes to the more broad-based, all of them trying to print lower lows here. All of them dropping below their daily pivots. Just looking for a continuation below yesterday's swing there at 27,447. But, again, if we're just looking at pivots, we pushed up, got rejected the pivot. We're coming down. I'd look for the S1 easily, probably the S2, at least. We dropped out of this ascending channel here, which should say this is done. We're below this wave 4, so that means this wave is completed. I'm really looking for a decline below wave E of 4 here, the wave 4 triangle termination point. If we can get below that, that means this wave here is completed, which increased the odds significantly that we're headed back down. So yeah, again, and the Dow here, of course, never making a new all-time high. It didn't confirm NASDAQ or the S&P or whatever. So usually when you get these divergences in the more broad-based index versus the the more specific indexes, usually that's an indication that a wave 2 is completing on that broad-based index. So even though the other one's made a slightly higher high, you end up getting this here. Now, some people will look at this and they'll call this a truncated fifth. Do what you need to do. In this instance, maybe I might be willing to accept it, but in general, guys, I'm not a big fan of the idea of truncated fifths. I'm usually looking for another count that makes more sense. But, it is what it is there. So we'll see how it continues to play out. But if we're getting a drop down below that swing low, that should be really a good likelihood that we're headed down. The next step after that would be a decline below this wave 2 swing low here at 22,789.60. If we can get down below that, well, that looks just about done. That puts the odds significantly in the favor of that being the top, and we're headed much lower. And of course, a decline below this swing low just kind of seals the deal. But that's how you kind of watch on these bigger time frames as it's moving down there, what you figure may be going on there. Alexander says, do you think Bitcoin has the best chance to make it with a rising dollar? Oh, if you think that, do you think the stock market, more particularly the NASDAQ, has the worst chance since it went up the most? Oh, everything else aside, the NASDAQ should take the biggest hit because it advanced so far, so fast. Again, guys, we talk about parabolic movement. The more parabolic price goes, the stronger and larger that return, that decline's going to be. I mentioned probably within the last 2 months, because of how the NASDAQ continued to push up higher and higher and higher, go straighter and straighter up. I said that, when you get that versus the other indexes, that usually the NASDAQ historically makes a much larger decline. Usually because it's gone up, again, more straight up for a longer period of time. So you should necessarily get a stronger the idea that that every action is an equal and opposite reaction. Go as far as you can, and then everybody starts shorting it, right? Yeah, so you should expect that. Let me see here. Look up the cubes here real quick, since you're here real quick. And you reminded me by asking that question. And let me see here. Guys, I haven't looked at it since the 28th of last month, so a couple of weeks here it looks like. Oh, yeah, look at that. That monthly is looking awful at the moment. Right now we've got a bearish engulfing on the monthly with a rejection at the R3 and at the top of the channel. I mean, any way you want to look at this, it's setting up for a likely reversal. If you're looking at channels, it got rejected at the top of the channel. So that's usually an indication that it's, that's it. It's going to come on back down. Again, candle-wise, it's only the 11th of the month, though, so you still got a lot of month to go. But right now, we've got a bearish engulfing candle printing. So if the month closes like that, it increases the odds significantly that that's the top. If you're looking at pivots, you got rejected the R3 pivot. So you should be looking for a move down. And if you drop through the R2, that increases the odds that you're actually going to drop through what would be the pivot here. Just the way pivots generally work. When you're looking at traditional pivots, you're interested in the S2 through the R2. You get to the S3, and that's kind of like your mid zone there. You go beyond it, you can go further, but if you come back, you're usually going all the way back the other way. So in this case, rejected there. So if you're coming back below that R2, you should expect to get down here below that pivot. You drop below this swing low. Well, if you drop out of this this ascending channel here, you should be looking for further downside. That should kind of really, all these things continue to add support for the idea that this is the top up there as it continues to move. Does all that. So, yeah. Damon, Data, you're a mess there, man. Let me see here. As far as this channel goes, again, touch at the bottom, touch at the top, touch at the bottom, touch at the top. That's the importance of this channel. 4 alternating touches. That confirms the pattern, and usually after the 4 alternating touches, price goes in the opposite direction. So, touch at the bottom to start it out, touch at the top, touch at the bottom, touch at the top. 4 alternating touches, price usually reverses and heads the other way. So if you're looking at channels, that is kind of what you look at it. Channels, you generally start in the direction of the trend. So the trend was down here. So the channel starts at the bottom here, rather than from the top up here or something. So this channel starts at the bottom here. And again, gives you those 4 alternating. Rejection there. Should see it coming down through the bottom. Again, just general rules of how you do this. Again, large bearish divergence here coming back from January of 2018. Any of y'all that have been following me, you know that I was talking about distribution beginning in January of 2018 with the Dow Jones, with the other markets there. I believe that's where distribution began. And so this would kind of confirm that. This idea here with this bearish divergence over all that time as well. So yeah, we got all that there. Let's see here. Let me catch up what else we got here. Oil. You guys should be interested in oil, right? So of course we look at WTI crude here, which is West Texas Intermediate. Still doing its thing here. I think it's still got a little bit lower to go down. I think maybe we're looking around that $35 area to finish off 5. It is possible this is 5, and we're heading up here. So really what we're looking at this point is this range right here. And so an impulsive advance and sustained movement through that resistance should indicate this is probably wave 5 finished right here, complete. If we get the same thing down through here, it means it's likely wave 5 right here. If you're looking at that, let's see here. Yeah, and so you see, notice this area right here, this low to this high here, is basically the range from just above the 50 to just below the 78.6. So that's what I'm interested in as far as supply goes. And that gets you right around the 65% retracement area. So if this is wave 5 bottom here, I would expect to see a reversal around $41, $41.10 right there. If this comes on down here to the demand structure EQ to finish off 5 like this, or I guess it would probably come down a little bit lower, I'm thinking, because the expectation would be that 70.5 would hit that kind of area there. Still looking for the same reversal, same area, just as a little bit further up. Let me see here. Yeah, I can see this right here. This is, if we look at this, let me throw this in here. You're going back between dark and light charts, things happen. But notice how you've got your resistance right here, and then your support right here, right there at that level. So if it's coming down here through the EQ, I might be even expecting to see it get down here around 34.50 before pushing up, but still looking for that reversal probably around that $41 area. Now, is this A, B, and then C, or 1, 2, 3, 4, 5? I'm not convinced yet. Like I said, I've got 5 up here. Prior to June, I was looking at us still having another low to go. I was looking at this right here, potentially being wave 4, and then a 5 down. But for right now, we'll look at it as ABC, and we'll see how it plays out. Probably looking, down here around $31 or maybe less even, to get that down there. But there's still a glut of supply across the world. Storages are still full. Demand is still down overall. So I don't see a whole lot of positiveness for oil at the moment, which means lower gas prices at the pump. Yeah. It's also helped, if you wonder why the USD has done so well against the loonie, the Canadian dollar here recently, it's because we've had the DXY rising and oil dropping. The loonie gets a lot of its value from their oil exports, and less oil exports mean less income. Less income means less strength in that CAD. Those two things happen at the same time have really given us a great ride up so far on the USD CAD. So that's been great. Let me see here. Natural gas. We've got natural gas. Let's see here. And by the way, these are things we follow every day, guys. When I talk about intraday updates a couple of times a day, these charts I'm showing you, this is what we do a couple of times a day every day for our members. So right now, it looks like we're going to get a pullback toward this $2.17, $2.19 area. It looks like we've got a W as an ABC here, and then we've got an A, B, C, D, E, so an X triangle. And then we've got a Y, so we've got A, we've got B, and then we've got maybe a 1, 2, working on a 3, we'll have a 4, and then a 5 finishing out that C down there. And then that sets us up for a 5 up here, at least to the $2 and almost 88 cent to the $3.01 kind of range right there. We'll see where this reverses out of this area and get a better target on that. But, nothing really surprising happening. Still doing the things we've been looking at it doing for a while now. Now it's taken a bigger hit here because there was a supply thing, and then their cooler weather means less demand for heating oil. So natural gas, natural gas there taking a hit. If you want to blame news for it, it is what it is. But basically, we saw a 3, we had a 4. I mean, it is what it is. No real surprise on that, guys. Silver. Silver. Silver, here we go. Again, I still, it's still possible this could be one more correction before further up toward $33 and $35. But until we're getting above this swing high up here at 29.915, I think your buy should be to the downside. Locally, you're looking for a decline here below this swing low at 25.985. Once you do that, your next target is this swing low over here at 23.58. And if you can get below that, I think you kind of erase, any real bullish hopes on that. Right now, I've got this as a 1-2 and then a interior 1-2 here. And that would have us a 3 down here at around 23. So that's what I'm kind of looking about at the moment. We'll see if it plays out. But again, definitely aware that we could potentially be rising higher with those other targets we've talked about constantly if it gets above that swing high up over there. Let me see here. Leighton says, I need to make some serious money in the next couple of years. Thinking seriously about joining your Tier 3, Chris. Well, I mean, you know what? All I can tell you is that, man, I bust my butt. Scott and Adam, we all bust our butts to really give everybody more than even what they expect, as much as possible. The only thing I would say is if you're expecting somebody just to spoon feed you entries and exits, that's not us. Don't waste your money. But if you really want to learn things that can help you understand the market and trade the market more effectively, techniques and tips and tricks and all that, and see how all these things work on a daily basis, Tier 3 is where it's at. Again, if you join, you get access to all the previous, 10 hours or so of Tier 3 training stuff we've done over the last 2 months as well. So you don't miss out on what we've already taught you or taught them. So, I mean, I guess theoretically, I might have to change this in the future, but theoretically you could come in as a Tier 3 right now and access 25 hours worth of, by the end of this month, I guess it would be upwards of 30 hours worth of educational content, and do all that and be pretty well ahead and just not come back. Now, we'd love to have you stay, obviously, but I guess theoretically, if you wanted to learn real techniques that you can use to actually make money in the markets and whatnot, and to get a better understanding overall of how and why markets move the way they do and how to use certain indicators properly and how to use them together to kind of find, figure out what's going on in the charts and all that. 1 month. It's a lot more than you'll ever get anywhere else paying $100. I'll tell you that. Like I said, I may have to do something about that, but for right now, I think it's cool. Because, again, people don't usually join for just a month with us, so I'm good with it. Hank says, Chris's is the only paid group I've ever recommended, and I hate paid groups, so that's saying something. I appreciate that, man. But again, also, guys, be aware, we do everything we can to kind of distance ourselves from the idea of paid groups, because it really is about the education. At the end of the day, guys, it's what I do here on steroids is what it is. It's about doing everything we can to help you guys become better and more successful traders consistently. I just always have that negative connotation of paid groups. I've never been in one, but our members have told me horror stories from what they've been through, and I'm like, oh my God, I hate that people would actually, kind of use the same terminology to describe what we do. But it is what it is. But we're not a paid group in that way. We're an educational resource, for sure. Not that I'm giving Hank a hard time or anything, just hopefully helping those of y'all who don't know what we do and how we do it, that we aren't what those other things are. We're a lot more than that. So, yeah. I did say on steroids, LXT. Stop getting so excited about drugs, man. Let me see here. Hank says, yeah, but that is what they all say. However, mostly they are one-trick ponies. Yeah, and that's always the same thing, guys. That's why, I can tell you what I want to say. Scott can say what he's going to say. Adam can say what he's going to say until we're blue in the face. But the reality of it is, it's my company. We all work here. You would be wise to kind of question anything that somebody actually works there says, right? Which is why we make access, we give you access to the Good Vibes channel where, our members, whenever they feel like it, they can go in there and just, publish their thoughts, what they think of us and whatnot. Why I try and remember to post it when they say something, especially elsewhere in Discord. I try and remember to post on Twitter. Rarely do I ever do it though, because I'm more interested in just getting the content done. But I know I need to market better. It is what it is. So yeah, kind of stuck that, that kind of situation for me. But always feel free, guys, to ask our members what they think. And, we don't pay them anything to tell you guys anything. Matter of fact, they continue to pay us. Remember, they don't stay here for free. So I don't know. One of the best things I can say is, if you want to know if something is potentially worth it or not, or, and it's a subscription or a membership type service, do people stay there? And emphatically, our members do. Again, like I said, you'll see many of them. You've heard a few of them already talking about how they've been here since day one, 3 years, or, 6 months, or, a year or whatever. So, people aren't going to stay where they're not feeling like they're getting value for their dollar, or their euro, or their cable, or their loonie, or their, we can go with all the different currencies there. Anyway, gold basically looking at the same thing as silver right now. There's always as long as we continue to range sideways here, there's always the possibility that this could just be before one more move up again, potentially around 2,300. We've talked about that. If it gets above this swing high up here at 2,089.20. As it's continued to somewhat consolidate here, you want to watch the ranges. If you get above yesterday's swing high, right there at 1975.20, your next target is to get above 2001.20 cents. As long as you remain below that, then this count up to this point is still valid. If you get up above that, then this swing high right here at 2024.60 becomes your next target. Because as long as you remain below that, this count is still valid. This is just potentially, a 1 and then an A and a B and maybe a C here for a 2. The 2's just not finished. So that's what you're looking at. If you can drop below this swing low, though, my first one is this yellow line here. It's this swing low at 1926.30. If you can get on below that, I think you take out all these swings here. You can see you've got them all here from about 1908 to about 1947. So about that $39, $40 range right there. I think once you get below this, that becomes the target, but I think you kind of go through it. If you get through that, all you got to do is get through this this swing low down here at 1898.50 cents. But if you're getting below these swings here, I think that all but cancels out a possibility that this is just a bit corrected before further up. I mean, there's still a possibility, but you get rid of a lot of that possibility by getting below this set of swing lows here. So again, that's what we continue to look at there with gold. Let me see here. Oh, so much here. Man, we're almost at 1 o'clock here. I think that'll probably just about do it there, guys. I think that's kind of where we're sitting. I mean, it gives you an overall bigger picture of what's going on with all the markets. And you notice they all kind of intertwining with what's going on here with the DXY. So at the end of the day, do we potentially get this inverse head and shoulders and move out? Or even if we don't, again, the biggest thing is what's going on here. Is this 2 and we're headed up to 3 now? Or is this A, B, and then C for a flat or an expanded flat for wave 2 and then headed up? If we're dropping, I will start getting more concerned if we're dropping below this swing low over here, what I have labeled as a wave 2 here. If we're getting below 92.21, that'll bring a lot more concern that maybe this is just corrective here, wave counts off a bit, and we've got a little bit further to go towards some of the other targets we've talked about previously. As long as we're above that, though, I think our bias remains to the upside, and we continue to watch how it goes. I think that's maybe your first kind of, gut check there about, okay, maybe it's potentially just corrective here and heading down further before it does come up. So again, guys, I feel like that's the bottom. I feel like things are there, but the market doesn't care about my feelings or your feelings or anybody's feelings. Market does what it does. Your job is to not be emotional, to pay attention, to think it through, to understand what's going on, and then after all of that, to apply the absolute best risk management possible. Because there are no guarantees. No matter how good something does or doesn't look, there's no guarantee it's going to follow through the way it appears. And so, I think that's the biggest thing with a lot of new traders. They go, oh man, it looks like it's bullish, or oh my God, it looks like it's bearish. And they go all in and they think that's what it is, and no risk management there. And then price just completely smacks them the other way. For markets in general, the February-March drop, with the stock market, everybody thought it looked so great. It was going up. I mean, it was a huge ascending wedge. That was the first giveaway, everything else aside. But people are like, oh, black swan event, whatever. Well, I don't know. It was coming down regardless, based on what was going on in the charts. So if it hadn't been the pandemic, it would have been some other reason we would have given it. Because we're human beings and we tend to do that. But the markets, the news is reactionary to the markets, not the other way around. Really. So at least in the grand scheme of things, the way markets are going and whatnot. You might get a little volatility off a news event, but generally the trend is already set. Or if it happens to be one of those times where it reverses at that time, everybody say, "Oh, look, it's because of that price reversed." No, because if that's true, then it has to happen every time, and it rarely happens. Guys, when you're looking at probabilities, the more often a thing happens, the more likely it is. If it doesn't happen consistently, though, question it. But people don't. Again, it comes all out to what we were saying there. As far as people not really thinking, just kind of passing along things that on the surface, those sound bites, immediately think, oh, yeah, sure, that sounds like it makes sense. But you don't really think about it. But when you do and you back test it, which you can do with markets, you find out all these big news events aren't doing anything really. Trends are already set. Things are already moving. Expectations are already there. So there you go, guys. Yeah, Leighton, exactly. There's a lot of bearish divergence in all the charts before the March correction. Exactly. Yeah. Anyway, so there you go, guys. That's what it is. Again, guys, if I come across as friendly and congenial and whatever, I'm glad, because that's the way I am. And you can ask anybody that's been with us, or anybody that's been following me for 3 years that's talked to me. They'll tell you I am. I'm rarely ever disrespectful. Again, I'm a human being. I don't think I generally get that point, but I'm sure I do at some point. I try really hard not to. But I tend to be direct, and sometimes, people are very sensitive. They can't handle when people are being direct. They take it as an attack. There's not a whole lot I can do about that. I have worked over 3 years now of consistently working on the way I communicate my ideas and my thoughts, so that I try to remove as much of the wrong potential, view of what I'm saying as I can. But at the end of the day, guys, I can't make you understand what I'm saying. I can do the best I can. But, if you're taking personal offense to something, I can say without a doubt that almost exclusively that's going to be on you, because I don't ever really, intend for that to happen. So the good thing about it is our members are even better than I am. So Again, guys, you'll keep hearing me say it. I'm just a guy that does a thing here. That's all I am. I think our members really make it worth being a part of what we do. So there you go, guys. I hope you guys have a really great day, honestly. We've got the weekend coming up. I really hope you guys take some time away from the charts. Remember, if you don't, you don't notice it, but the constant viewing of the charts, especially on lower time frames, creates stress in the back of your mind, your subconscious, that you don't understand. And that stress leads to emotions, negative emotions. Stress never leads to good emotions. And so negative emotions often result in poor trading decisions. So if you want to know what can you do today to help yourself be a better trader, immediately set a time frame that you're going to trade and look at charts, and then don't do it any other time. Who cares what happens when you're not at the charts? If you're trading, all that matters is what's going on when you log in. Don't be a slave to the charts, guys. You'll be a lot better off. I firmly am a believer that trading should provide two things: more time and more money. That's what freedom is. You're not going to get freedom from your government. You're not going to get freedom from your spouse, whatever. Money talks, BS walks, right? If you've got money, you can find somebody to do just about anything you want. Time you can't get back. So I'm a firm believer that trading done correctly gives you more of both of those things. Now, what you decide to do with your money and your time is up to you, but that's the goal. You should be able to choose what to do with it, rather than being a slave to having to go into that job that maybe you don't really enjoy, doing those things, missing your family. I know a lot of guys. I got friends, man, who work. I work a lot of hours with TWC, but luckily I can hang around my son. I homeschool him. He's with me all day long. I've got friends who work out in the oil fields. They're working 100, 120 hours a week. They spend away from their family. Other people that work in high finance, same idea, 100 hours a week. Even when they're home, they find it hard to disconnect. The goal should be to be a better human being, guys. Okay? So there you go. I'm done. I'm out of here. I hope you guys have an amazing weekend. Thank you so much for being a part of what we're doing here. We'd love to have you again at Discord, so join us there. Discord and the website there. You can get it at howtotradetowin.com. Just scroll on down the page there. Like I said, I think next week we're going to cut off new memberships to Tier 1 and Tier 2. So if you're interested in one of those tiers, you probably better do it pretty soon here. And then for a while, I think all we're going to do is offer Tier 3. And we'll see how that goes. We'll see how we can manage it. Again, guys, I'd love to have 1,000 plus members. We've got 300 right now, but I definitely don't need it. And so what that means is, if we're taking on more and more members, and what we do starts to suffer in terms of our members, we're going to cut it off. Make sure people can't join. Just because, to me, it's all about, you guys are paying. It's what you get, right? I'm not here just to take your money and then to kind of just half-ass it. So, anyway, guys, you guys have a great day. Don't forget, the only thing you control in the market is how much you lose. So it's all about that risk management, guys. I keep telling you, the one thing you can do more than anything that will affect your bottom line is risk management. If you spend more time perfecting that than anything else, you'll be further ahead. All right? You guys have a great day. Thanks so much for being a part of this, and I'll catch you on Monday at 11 a.m. Central Standard Time. Take care.